Welcome back. Just one day after Micron entered the $1 trillion club, we are already seeing Wall Street divide or split into two camps. One side believes that AI memory demand has permanently changed the economics of the sector. The other side says that every major capital spending boom in a history, it eventually collapses under its own weight. For example, a heavyweight warning note from Raymond James hit the wire this morning. They explicitly argued that this AI capital spending boom, it mirrors 11 historic macro cycles over the last 150 years. And every one of those cycles, they all ended in an absolute bust. But while the institutional desks are shifting into this intense macro debate, the raw price action today for the memory titans, for the Fab Four, it told a completely different story. So let's go around the horn before we start the video and just see exactly how all the memory players, how they closed the day today. Let's start off with Micron first. And if you guys know, Micron had an unbelievable day yesterday, 20% gain. Today, they actually put almost a 4% gain on top of it, 3.64%, another almost $33 in share growth. We see the stock closed at $928.50. If we look over to the right, you can see the intraday high got to $956.16. So this stock is moving towards that $1,000 mark, no question about it. In the pre-market, though, we're seeing a little bit of pullback, about a little over 1.5% pullback, $15. The stock right now is trading at $913.50. We see this across all four of the memory titans. So will we see a bit of a profit taking tomorrow at opening bell? We'll have to keep our eye on it and see how things evolve overnight. But right now, all of them seem to have just a touch of a pullback going on. SanDisk was up 7.5% today. Yesterday, it was essentially flat today. It was down by 0.04, 65 cents. And for a stock like SanDisk with a high beta that it has, to be only down 65 cents is kind of astonishing on its own, because this stock moves up and down pretty violently. So this stock held all of the gains that it had yesterday. It actually got to a level of almost 1660 today, just below that 1659 essentially. So hit a new 52-week high in the pre-market. The stock is pulled back by about 1.5%, $23 right now. It's trading at $15.65. If we jump over to the storage titans, you remember Western Digital was the second highest from a percentage volume yesterday. They put another 1% on the board, another almost $6 gain for the share price. Closed at 530, just over 530. It actually hit a high of almost 547 today. 52-week high for the stock right there, accomplished on today's trading. Right now, we're down by about half a percentage point, $3 pullback. It's sitting at about 527, 528 a share. And finally, we'll jump over to Seagate. Remember, Seagate yesterday was a 4% gain. It was the lowest gainer of the group. Today, it put another 3% on top of it. So about a $25 gain. The stock hit just under $871 a share. If you look to the right, it actually got up almost to $890 a share today. Seagate is making a run towards $900 a share. This is a massive move for not only Seagate, but we're seeing the storage kings just starting to break out, starting to get into this blue sky territory. Again, we're seeing a little bit of pullback in the pre-market with Seagate as well, but it's essentially flat. It's a 50 cents pullback. So we'll have to keep our eye on all four of those stocks as we head into the opening bell tomorrow. But today's video, I really wanted to focus on this debate that is happening in Wall Street right now, because we're seeing both kind of the bulls and the bears talk about this sector. So we've got to figure out, where is the signal inside all of this noise today? Is Wall Street ringing the bell at the top of the at the generational top for the sector, or is the smart money completely mispricing a multi-year structural paradigm shift within the memory sector? Today, we're going to dive straight into that debate. I'm going to show you both sides, and we're going to look at how overnight international data is filtering into the memory space as well. We'll break down the candlestick patterns for Micron, and we'll talk about who is actually controlling the price action for the stock right now. And from there, I'm going to give you my definitive tactical playbook for tomorrow's opening. What are we doing with these memory stocks after this parabolic run? Are we accumulating? Are we holding? Or are we locking in profits, trimming some of our positions in our portfolio right now? So we'll discuss all of that in today's video. But if you haven't had a chance yet, make sure you hit like, make sure you hit subscribe. Guys, we are growing at a great rate. Thank you for each and every one of you for your engagement on the channel, all the questions, all the likes, everything you're doing to help this channel grow. I appreciate it. But if you haven't subscribed yet, Let's do it now. Hit that subscribe button, join the community. All right, let's jump in and first just kind of take a look at what is the debate from both sides. So the thing I want to pull up first is an article that I saw in Wall Street this morning that I think kind of summarizes some of the concern that we're seeing in Wall Street. It's all around the $1 trillion kind of mark for Micron and how quickly the company and the stock got to the $1 trillion mark. You can see it in the headline. The Idaho chip maker that doubled to 1 trillion in 48 days. And so if you look at the chart below, you can see it's showing you the time between a $500 billion market cap and a $1 trillion market valuation. As it said in the header, Micron did it in 48 days. If you compare that to NVIDIA, it was 490 days. Berkshire Hathaway was over 5 years. So this level of concern and kind of growth, I think is raising alarms with the bears in the market overall. And if I scroll down, you can see that the stock has surged 80% in the past month. You know, it reached this threshold of 48 days after it was valued at 500 billion. It's the fastest to ever do that. I'm going to show you a chart in a moment that just, again, shows it kind of visually and it jumps out. But you can see NVIDIA took 490 days. I love this quote here from Michael Rosen. He says, Micron for years was considered just a commodity play. They make very basic, fairly simple things. But now Micron is the poster child. We saw the Trump administration call them out about, boy, just how great Micron is. And that was a bit of a catalyst for their growth as well. It is just the rate of growth for the company is concerning people in the market right now. Is this a sustainable rate of growth, essentially? You know, and is this time different? That's the big theme I think we have to ask ourselves or confront ourselves with that most dangerous kind of four-word statement. Most dangerous in history is that this time is different. I will tell you the bears say it's not. And let me jump over and show you the warning note that came from Raymond James this morning that hit the wire and caused all of the debate. But you can see here it's on Morningstar and essentially saying that the AI capital spending boom looks historic. 11 other booms suggest a bust is inevitable. And I'm going to just walk through the article with you because it says this time won't be different, says strategist at Raymond James. Artificial intelligence capital spending boom is on par with the biggest over the last 150 years. They looked at 11 other booms, including the build out of the U.S. railroads, World War II mobilization, and the Japan asset bubble to get a sense of how long this one will run. And if you go down here, basically the strategists at Raymond James say that these booms follow the same basic curve. A technology innovation followed by evidence of how profitable the boom could be, which in turn leads to more concentrated portfolios. Then an exogenous shock to the system happens and access to capital closes as stock prices fall and credit spreads widen. Booms tend to drive the overall economies with long-term treasury yields increasing, inflation accelerating, equities rising, and credit spreads tightening during all capital spending booms, and all reversing, sometimes dramatically, when the capital spending starts declining. Busts occur when capital spending starts declining, which could be from rising inflationary costs, overcapacity, asset price reflexivity, cash flow delays, or any combination. Their expectation at Raymond James is that the AI will meet the same fate as past CapEx booms. It's hard to find any example of a capital spending boom as large, fast, and narrow and privately funded as the AI spending has been. That hasn't ended in a bust. It can't find one that meets all those criteria as I just mentioned that hasn't ended in a bust historically. So that is kind of the debate that's out there in the market right now. But here's why the institutional whales are aggressively fighting history on this tape. Historically, memory chip makers traded at a deep discount, single-digit price-to-earning multiples because they were treated as commodity providers. If demand ticked up, they built too many fabrication plants, oversupplied the market, and crashed their own margins. Exactly what we saw during the brutal 2023 cyclical down cycle. However, as Melius Research and UBS pointed out in their blockbuster notes this week, the physics of artificial intelligence have completely altered the manufacturing mechanics. Advanced AI servers require high bandwidth memory and enterprise NAND flash to prevent computational bottlenecks. But HBM is incredibly resource intensive. It requires roughly 3 times the semiconductor wafer capacity as compared to standard DRAM. This means that by shifting production to satisfy the insatiable demand of the AI data centers, the global memory providers are systematically suffocating the supply of standard memory for PCs, smartphones, and automotive servers. The industry is currently facing the tightest structural capacity crunch that we've seen in over 40 years. This isn't a speculative bubble built on vaporware. It is a physical asset class shortage. So let's see what Gene Muster from Deepwater Asset Management thinks about this question overall. Is this time different? So let me pull up his video and we can take a look at it.
Gives me pause is the following. It shows how long it took a company to go from 500 billion, to $1 trillion in market cap. And if you look all the way to the right of your screen,
this is the graph I told you we need to look at.
5 years, Apple not far behind, Alphabet, Meta, Amazon. All the way to the left is the amount of time it took Micron, which you kind of have to squint to even see, Gina. And that's what makes me wonder if this is a little too far too fast.
I want you to listen to Gene's perspective.
I'm always nervous about the concept of this is going to be different this time. But if we think about what AI is doing to humanity, I think it is different. I think objectively this is different. And what we've seen in using these comparisons, the comparisons of .com, the comparisons of how long it's taken companies to reach the $1 trillion market cap, using those comparisons, I think, are a trap. What we have to do is look forward. And effectively what we have is a world that is preparing. The brain of AI is getting much bigger. That's what we've seen with the hyperscalers as they're building that brain out. And we still haven't seen the utility. It's still far and few between. Beyond Google revenue growth and Meta, there really aren't a lot of great examples of AI having an impact on our world beyond experimentation. Once that becomes more mainstream, you can start to imagine the demand for intelligence at scale is going to only increase. And so I think that the big picture here is don't look at the, my perspective, don't look at the rearview mirror, how long it's taken us, look at what's in front of us. And I absolutely believe this is going to be a tsunami much bigger than what people anticipate.
I love when he says this is going to be a tsunami, much bigger than people anticipated. And don't look at the rear view. Look at the window that's in front of us, because it is a completely different time. And I agree 100% what Gene said in his comments there. So I think you got to factor in that part of the debate as well. I mean, the Raymond James article is looking historically at booms and busts that happened in a different time frame. It wasn't during the AI build out. We have a demand ahead of us for 5 to 10 years for the build out. We know we're going to move to edge into different applications for memory. So I think this sector has an incredible run that remains, and I'm still very bullish overall. But we got to remember too, as we've said before, that this is not just a domestic story. To read the signal for Micron, you have to look at the global layout as well, because the entire DRAM market and the entire HBM market is effectively controlled by 3 companies. You guys know that. It's Samsung, SK Hynix, and Micron. Together, they control over 90% of the worldwide supply. And if you want to know if the institutional capital wave is slowing down, look at what happened in the Asian corridor just hours after Micron hit the $1 trillion milestone itself. So let me pull up that article and we can walk through it together. It's probably not a surprise to you that we saw one of its partners, SK Hynix, hit the $1 trillion valuation as well on the same day, essentially, as the AI boom lifts South Korean chip stocks. So you can see SK Hynix jumped as much as 11% on Wednesday, lifting the Korean chip makers' market cap to above $1 trillion for investors. So this is the 3rd member now. All 3 of the HBM providers, we know Samsung hit the $1 trillion mark earlier this year. Micron did it yesterday, and SK Hynix did it yesterday as well. They officially pushed the company past that milestone. Samsung, they did it earlier in the month. But this confirms that the entire memory sector has been structurally re-rated by the market. So let's jump back to the active tape. I want to, like I mentioned in the beginning, let's look and see who's actually controlling the price action right now with Micron. I want to jump to the candle pattern chart for the stock. So let me pull that up and we can look at it together, because you guys remember we looked at it yesterday and it was a classic mechanical game of squeeze. Today was a very different view on this chart overall. And you can see, you remember yesterday, we just had this kind of continuous diagonal low volume grind that squeezed the market makers straight into the closing bell. Today's tape shows a classic anatomy of institutional digestion. So first, let's look at just how it opened up. I'm circling here. It gapped up from the get-go. It actually hit that morning high of 956 across the board, and we saw some profit taking immediately come right down. The stock dropped right down, but the buyers stepped in right at that 922, 924 level for the stock. And then once it hit that intraday consolidation pattern that you see right here across the board, where we just started moving kind of sideways, the steady volume completely dried up. As the afternoon progressed, the price formed a steady rising base, carving out higher lows on every 5-minute interval. Now look at the bottom indicator pane showing the RSI below. Unlike yesterday, you remember yesterday where the RSI was pinned in an extreme overbought territory all afternoon long. Today's RSI is reset, was beautiful. It oscillated between 40 and 60 throughout the day. And this tells us the stock spent the day working off its near-term technical extensions without giving up its price gain. It absorbed the profit taking, consolidated the new valuation, and it experienced a clean uptick into buying volume right to the 4 o'clock close. You can see just kind of a nice finish right up into the close there. So it wrapped up the day at a commanding just about 929 overall. This is an exceptionally healthy, high shelf institutional accumulation for today. So this brings us kind of to my last part of the video, is exactly what are we doing with this sector now? Like, how do we play this moving forward? Do we aggressively accumulate these stocks at this all-time high, or do we sit on our hands and hold? Or do we trim positions and lock in some generational gains that we've seen in this stock? So I want you to hear a perspective from another analyst from Deepwater Asset Management, and I'm going to give you my perspective as well. So let's jump over first and just take a listen to what Doug Clinton has to say.
If you don't own it already, and you look at a price target like Barclays puts out today of 1175, up from 675, can you buy it today? Can you own this stock if you don't?
I think you can. Yeah, I absolutely think you can. And I think if you think about the world in the next 12, 18, 24 months, I'll give that kind of time frame. I think that's what you kind of have to think about if you're entering Micron today. I wouldn't enter it today with the hopes that it keeps going up 20, 25% every week. I'd really try to zoom out and think about the cycle's not over yet. The PE is still reasonable. And even if there is a sort of, slowdown, let's say, in the stock market for these types of names, I think your downside is probably somewhat limited relative to some of the other big names that have moved a lot, just like Micron, because you do have that PE support that I think is real and durable for the next couple of years.
So that's the position from Doug Clinton from Deepwater Asset. He feels like an entry point right now is still a durable play, just be given the demand in the market, the fundamentals of the company overall. But I want to give you kind of my view, which in some ways is the same, but in other ways is different, because I have 3 different types of investors that I want to talk about. One is, I think, if you're a long-term this is a long-term core position in your portfolio, I recommend hold right now. If you built this position early based on our structural memory supercycle thesis, you do not sell your core allocations here. The core fundamental data remains fundamentally unshakable. Micron's HBM capacity is entirely sold out. The forward price to earnings multiple is still sitting at a remarkably modest 10 to 15 times forward earnings, dramatically cheaper than the broader semiconductor index. And its quarterly gross margins are projected to scale towards a staggering 81% as HBM and enterprise NAND pricing power accelerate. The structural scarcity right now in the market is real. You hold your shares for this multi-year cycle. Now, the second position would be if you're a active short-term or a leverage position, and I would recommend you probably do need to trim and lock. If you're holding near-term call options, leverage instruments, or an oversized allocation that is causing you some emotional stress, the high shelf consolidation is your tactical window to trim and lock in profits. Never let a massive single day vertical move like we've seen in Micron, never let that turn into a regret for you. Taking 10 to 20% off of an extended leverage position isn't a sign of weakness. It is the literal definition of professional risk management. It frees up cash reserves and prepares your portfolio for the eventual macro reset. And then for those that are asking me the question is, if I'm not in Micron yet, can I still do it? So for new capital, my advice is do not chase. If you are sitting on the sidelines with fresh capital right now and experiencing a bit of FOMO, do not buy the vertical tip of the spear at 928, 929. Wait for a healthy kind of broader market pullback to retest the major technical support lines before you deploy fresh long-term capital into this stock. Ultimately, though, today was just another incredible session for Micron and for the broader memory sector, proving once again that the structural demand, it's real for this sector. But as the big names continue to run, the key is to stay disciplined with our capital, with our investments. Don't let the daily noise or the chasing headlines derail your plan. Manage your risk, keep your position sizing smart, and let the data do the heavy lifting. As you heard from Doug Collins on his video, what his recommendations are for entry points. You heard my 3 strategies as well for the different types of investors. But I want to hear from each and every one of you guys. How are you tracking tomorrow's session? How are you tracking this sector overall? Leave your thoughts below. Leave your comments. I'll try to answer each and every question. It's getting tougher with our community growing at the rate it is. But I hope you found this breakdown helpful. I hope you enjoyed the video, and I'll see you tomorrow at Closing Bell. Take care.